two, our news trading session number two, and then obviously it's going to be a theory session, and I'm hoping that we might do something a little bit more different tonight. If you have any questions regarding news trading sessions that we have done, do let us know, and we can discuss about that. All right, is audio coming through okay? Okay. I think audio should be coming through okay. Let me know if there's any adjustments that needs to be made. I think I need to make this a little bit louder. Just give me 1 second. Yeah. Let's go a little bit louder. All right. Hello, Tanvi, Himanshu, and sorry. And welcome back. My name is Angelo. Let's get started with theory and practice number two. And obviously, we do want to talk about the market conditions, and we might see a couple of different examples to what we are expecting every single month. Okay, just before we begin, I need just quick disclaimer here. Any opinion discussed in this webinar or links to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility. The market reaction to news can be swift and unpredictable, which leads to high trading risks and delays in order executions. So, be attentive when determining the volume of your transactions, especially during news releases, and consider all possible risk factors. Okay, that's going to be a promo code to double your deposit bonus. This is as per usual, and then you should already have access to the private Telegram channel if you have attended the sessions before. Otherwise, if you're new and just registered through the website, you should get that through your email. Or feel free to contact the customer service team, and they'll be more than happy to give you the link for the Telegram channel, which is the Octa's analysis channel. Okay. So this is a code. It's non-farm 2024. Make sure you are using the code when depositing into your Octa trading account to get a double deposit bonus. Still valid until the 31st of December 2024. Okay. So again, the code is non-farm 2024. Alright, just a little bit about myself. My name is Renjoro, and I've been a full-time trader with over 20 years of experience, and I've also been a professional trading coach and technical analyst since 2007. My field of expertise is in the Ichimoku Kinko Hyo technique, which is a Japanese charting techniques, and I've also been invited as a guest speaker at Trading Investing Expo across Australia, Invest Fair in Singapore, as well as the ATAA and the APTA conferences, which is the Australian Technical Analysts Association. All right. So this is going to be what we're going to be covering on tonight. Obviously, this is going to be a theory session. We do want to talk about the advantages, disadvantages, what news to look out for, how does that play into the market dynamics. And, I do want to talk a little bit about, what's going on as well in the world, which is probably a good example into taking into account all the news trading that we have here. Okay, so let's talk about the advantages first. And to me, I think all the necessary information can actually be found in the economic calendar, so there's actually no need to delve deeply into technical analysis or fundamental analysis. Now, news trading, a lot of traders associate this with fundamental analysis. I think to a certain degree it is very close to fundamental analysis. But at the same time, it is not fundamental analysis, okay? And it doesn't fall into the criteria of a technical analysis either. It's like somewhere in between, okay? So it's good if you have the understanding of a technical analysis. That would be helpful in terms of determining, all right, this is the current market condition. We're potentially looking for a potential breakout. We might see a little bit of a reversal, continuation patterns. That would fall into the technical analysis. Would it be helpful if you have that information? I think so. I think that would greatly enhance your performance during news trading. And also, if you have the know-how about the fundamental analysis, then it might also help in terms of figuring out, all right, this is what the market is expecting, this is a consensus. There could be a couple of scenarios that we might look into from a fundamental analysis perspective. There's also the key levels that we can take a look at from a technical perspective. But in reality, when we talk about news trading here, it doesn't fall into any of those two categories. In fact, I would say news trading itself it's basically just trying to figure out the reaction of the market towards that news. So in a sense, it will probably fall into more on sentiment analysis rather than anything else, right? Market is expecting the data to be this high, this low. What's the consensus? What could happen if the data comes in lower or higher than what the market consensus is? How's the sentiment going to shift? And that's basically what news trading is, in all honesty. And do you need to have the technical know-how, the fundamental know-how? No, you don't, right? Because if you know when that news is actually going to be released, you've done news trading before, typically they have and they'll form a specific strategy for you to use, and that's basically what we're going to be covering on tonight. Okay. All right. Second thing is the events in the calendars are ranked in order of importance, which helps in making adequate decisions. We might be looking at the news today. There are going to be speeches coming out from Fed members, for example. What would that fall into? Can we rank that as a high impact news? We could, right? But it's not really quantitative or anything like that. It's more qualitative. So we don't have any statistics to work with this kind of information, right? So would it have an impact into the market? I think it would have an impact, but it would depend on what they say. So for a lot of us traders, we can skip that because that's not something that we keep an eye out for. Okay, we keep an eye out on the high impact news, for example, retail sales number, GDP numbers, inflation numbers, which is what we're going to be doing on Thursday. Labor data last Friday we just did, those are going to be the high impact news, and you can actually go for those news trading, right? It's actually ranked in terms of how the impact is going to be. So, high impact news typically will move the market. Low impact news, as it says, it's low impact, probably wouldn't move the market, or it probably doesn't move the market as much as a high impact news. Doesn't mean that high impact news will move the market all the time. Sometimes if we already have the expectation in the market that this data is no longer relevant, high impact news might not move the market as much. For example, the labor data last Friday, that was huge, right? That was a huge surprise to the upside. I don't think a lot of traders actually anticipated that. There was clues to what it is, but in terms of the magnitude of the release, I don't think anyone kind of expected that. And then on Thursday, we're going to be looking at inflation number. Would that have an impact? Yes, it would have a high impact into the market, but would it have the same impact as last Friday? Probably not. Unless specifically we miss the inflation reading by a lot, right? If it increases significantly, for example, that would be a really huge surprise to the market. But if it drops lower than consensus, the market probably wouldn't be too excited about it. So it is a high impact news, but would it carry the same weight as the labor data that we just had? Probably not, right? So they're ranked by importance, but whether or not they're going to have that impact into the market obviously depends on what the market is looking out for. Okay. All right. Publication of statistical reports noticeably increases volatility, allowing traders to potentially earn significant profits in the short term. I think this is the reason why a lot of new traders actually trade the NFP numbers. And I'll be honest with you, it's not a bad thing if you know what you're doing. But to a lot of traders that don't understand news trading, obviously that could actually be a really bad thing because the market volatility is just so high. Okay, but if you get it right, it is the kind of volatility that intraday short-term traders are going to be looking out for, and that's the reason why people trade during the news, because typically without the news, they're not going to be getting that volatility in the market. That might take away a lot of the time. If you trade without having any market mover moving events, it might actually be a slow trade. Things could change from a technical perspective as well. So I think that would be an advantage. I think a lot of people, a lot of traders are going to be looking for that volatility. Obviously, if you're an investor, you tend to avoid news releases because you don't want that volatility. But if you classify yourself as a trader, then you would want that volatility. Okay? All right. The next thing, to me, that's an advantage is the simplicity of a strategy. You just know how to open and close the orders without the need to learn any complex formulas. We still need to have a strategy in mind. And typically we do the straddle strategy during news releases, right? But we don't kind of figure out, all right, we need to look at this, or we need to time the entry and whatnot. We don't, we just react to the news, and that's the reason why we use the straddle strategy rather than anything else. So the stuff that we're going to be covering on tonight, that's basically representing the simplicity of trading the news, okay? All right. The last major advantage, I think it's minimal time expenditure in your trading. You know exactly when to access the trading platform, when the news are about to be released, what actions to take, because you already planned it out. And the trading process itself can be completed in just a few minutes because of that extreme volatility. Now, what does this mean when we talk about minimal time expenditure? A lot of the time, people look into trading, it's to basically look for another source of income, right? That's number one. And the other thing is that you typically don't need to spend a lot of time looking at the charts. So you want to get in, you want to get in, you want to get in, and you want to get out as quickly as you can. You don't want to waste too much time looking at the chart, figuring out what the market is going to do, right? So a lot of traders has this in mind, and I think when it comes to news trading, news releases are fixed, right? We have fixed news releases. That's basically what we're going to be looking out for. So you know when the data is actually going to be released, right? For example, this Thursday, if I say to you, hey, we're going to have the CPI numbers on Thursday. If you don't know what you're doing, you don't know when this number is actually going to get released, then you'll be spending the whole day trying to figure out, is the news released yet? Or how's that going to impact the market and whatnot, okay? But if you are trading the news, you would know when that news is actually going to be released. And about 30 minutes to an hour before the news is released, you come to your computer, look at the chart, set up your pending orders, and let it happen, right? And that's the thing about minimal time expenditure on your trading. Because you know when that news is going to be released, it's going to be on Thursday. All right, so I don't trade, today. I don't trade yesterday. I'll wait for Thursday, and Thursday during news releases, I'm going to be on standby. During this release, half an hour or an hour before that, and then just trade during that time period. Some traders do that. Some traders just kind of just turn on the computer when news is actually about to be released, and they trade the news and they make that decision. Do they take the trades or they don't take the trades, and that's it. They only allocate, let's say, an hour or two during the week, just trade the news, and they walk away. They don't look at the market any other time. Right? Some traders do that as well. Okay, so I think that's the advantages. Now the disadvantages here is that because it doesn't fall into the technical or fundamental analysis, it's somewhere in between, and that's the reason why I say we're reading a little bit more on the sentiment of the market itself. The situation doesn't always develop as predicted by logical thinking and common sense. Okay, sometimes the market has already priced that in from a fundamental perspective, that they're expecting a certain consensus number, and then from a technical perspective, market might already be moving in certain directions before the news happen. When the news happen, people might do their profit taking. It could actually reverse the outcome, right? So sometimes it doesn't make sense, and it doesn't click on from a logical perspective. And that's, I think, one of the biggest risks when it comes to niche trading. It's so reliant on market sentiment, and it's also so reliant on the current condition in the market, what's happening that's affecting the global market. If you don't understand a little bit of a technical perspective or fundamental, then sometimes it doesn't make sense. It's not that it's not logical, But sometimes it will come across to traders that are not experienced that hey, it doesn't really make sense, right? For example, with Fed cutting 50 basis points, how's the reaction in the market so far, right? Do we see the US dollar weakening? No, in fact we actually saw the US dollar probably weakened for only about a week. Then the next week it kind of recovered, and then everyone is asking, what's really going on. During the rate cut itself, the US dollar actually recovered quite significantly. That's due to the bond market reacting a little bit aggressively as well. So sometimes it doesn't make sense, but if you understand the whole picture, it will click, right? It just takes a little bit of a time, and sometimes it's not really as straightforward as it seems. Okay. The other thing is that not all news can cause a significant market reaction, and this is the reason why we rank it in order of importance, right? If we have a high impact news, we'll typically trade the high impact news. Low impact news, we tend to avoid low impact news. Sometimes it doesn't move the market at all. We could just be looking at the screen, market's probably not moving at all, right? So we do want to avoid those kind of news as well. So what we're trying to say here is that not all news are created equal. Not all news are actually tradable. Okay, so just keep that in mind. Don't just go randomly looking at the calendar and say, hey, we got news release in half an hour time, it will move the market. It probably wouldn't, right? For example, what do we have today? Let me just load up the calendar. We got balance of trade, exports, imports number. That's going to be at, in 30 minutes time. Is that going to have a huge impact into the market? Probably not. It probably wouldn't have as a massive impact into the market. Would it move the market? It would, right? If the market really requires something as a catalyst, it will move, but it doesn't mean that we are going to be anticipating that news at 7:30, right? We might actually be able to look at that as an example, but if it moves the market, then yeah, that'll be good. Okay, and major disadvantages. All right, it's easy to with the volatility, it's easy for you to earn. At the same time, it's easy for you to destroy your trading account. So yeah, be very careful. The volatility goes both ways. Obviously, risk and goes both ways as well, right? If you're aiming high during news releases, let's say you open up with a huge position. If you get it right, then yeah, you're gonna earn a lot. But if you get it wrong and you open up with a huge position, that could actually destroy your account as well. So I have seen a lot of traders get undone by the news here, typically during the NFP, right? I've seen it a lot. To the point, I'll tell new traders, if you don't understand what you're doing, if you don't have anyone to guide you, if you don't have anyone to tell you how to trade the news, new traders, I would say avoid the NFP numbers because it could really destroy their account. Now, especially to traders that started trading because they thought, hey, I could get rich really quickly. Opening out a large position during these releases, I'll be fine. It doesn't mean that all the time, right? And I've seen a lot more traders actually get margin call a lot during this trading, and I've seen that happen during the NFP releases, FOMC interest rate decisions, and the CPI numbers as well. So yeah, be very careful. It does create a lot of volatility. At the same time, you could gain a lot. At the same time, you could also risk a lot as well. Okay, so be mindful of that. I think that's a major disadvantage into news trading. Okay. All right. So let's talk about the type of news that we have here. They're basically divided into two categories. We have the unexpected news. That would include terrorist attack, military conflicts, natural disasters, and at times like this, typically we look at a safe haven situation, right? Especially during a military conflict or a terrorist attack that affects, major countries, for example. Obviously, the current situation is that we have a little bit of tension building up in the Middle East there, and we need to look at the flow here. How does that impact the global financial market? What moves the market there? what safe havens are actually going to be affected. Some people some people say it's a US dollar. Some people think it's the Japanese yen, it's just strong. Some people say, oh, gold is also a safe haven asset. But if you look at the current condition here, the only one that benefits from the safe haven flow, it's just the US dollar. The Swiss franc and the Japanese yen doesn't function as a safe haven currency, and gold doesn't function as a safe haven assets as well, right? If you take a look at all the prices, it's picking up. Obviously, oil is going to be affected by Iran coming into the picture here, but gold, which should be considered a safe haven, it doesn't carry that much weight. As you look at the current positioning on gold here, we're actually looking at gold weakening as well. So this news is unpredictable. When it happens, it just happens. It would have a huge impact, but would it impact everything in the market? Probably not. So you still need to figure out what's likely going to be the impact of a certain natural disasters, for example. Terrorist attack, for example, in the US probably cause a lot more impact into the global market. Military conflicts, if it's fresh, if it's new, it will have an impact into the market because the market is uncertain about things happening there. But if it drags on for a year or two, for example, Ukraine, Russia, a lot of people are just looking at that and say, hey, we already know about that. It's really not a big deal at this point in time. It doesn't have that huge of an impact into the financial market, and the conflict in the Middle East as well. It basically started about a year ago, and only right about now things get really serious. We kind of worry about it from last year that Iran could actually get involved, but on the scale here, prolonged involvement from Iran, we're only seeing that a year, after the whole thing happened, right? So those are going to be your unexpected news. And then we have the periodic news that comes out regularly. This is something that we focus on. And central bank meetings, GDP reports, CPI numbers, PMI numbers, ISM manufacturing, ISM services, labor data. These are going to be your periodic news, and these are stuff that we can anticipate. This is what's on the economic calendar, and this is basically the main focus for a lot of traders. Okay, so we got the unexpected news. Obviously, it does carry a lot of unexpected risk into the market as well. It will just increase the risk in the market when an unexpected news break out. But periodic news is typically more statistical. It's something that we are going to be monitoring on, and when we talk about news trading, there's always going to be that periodic news trading. Okay. All right. Next thing I want to talk about is the three main phases of price movement. So we have the accumulation phase, and it looks like a sideways market condition. And this is where the most informed and forward-thinking insiders actually enter here. So basically, large positions, hedge funds, they're going to be entering positions in that accumulation phase. Participation phase is basically where a lot of technical traders or people that understand the market comes into the market, right? So this is basically during news releases, they'll trade that. There's a breakout, there's a certain pattern. Market moves away from the accumulation phase, starts to go in one direction. And then there's going to be the final phase, which is the distribution phase, right? This is where public enters with outdated information. So basically, for example, the way I would put it is this. People in the industry, we trade during the accumulation phase. Why do we trade that? We have the know-how. We have the skill, we have the people, we have the projections, right? We can anticipate where the market is actually going to go, right? So we have that information, probably information that's not released to the public or ahead of time before the public gets that news, right? And then we have the participation. People look at price analysis, they start figuring out, okay, price is refusing to come down. Maybe starting to build up a certain support, and maybe if it does break the range there, it could become a price breakout. That's participation, right? So people that understand the market, but they're not really in a scale where they can actually move the market, They would participate once they figure out what those people that are in the accumulation phase has figured out, right? And then, distribution phase happens when people that comes in the participation phase actually goes around telling their people, hey, let's buy gold right now, right? It's going up really quickly, let's buy gold. And then a lot of traders come in, they don't understand what's going on, they got the information from their friends, it's a little bit late, but they'll jump in, right? They might actually jump in and say, hey, the market is moving my direction, that's great, that's good, right? But the reason why we call it distribution is because people that have the position from the accumulation phase actually take advantage of that liquidity during distribution to get out from their positions, right? Once that huge profit taking happens, you could actually reverse the position, and people actually that comes in during the distribution phase are typically the one that lose out um, in their trades here, because they didn't buy in at a good price. They got it pretty late with an information that's outdated, something that's already hyped out in the market. Okay, so if you are using social media, I don't use social media, but if you are, and I'll see the trends, by the time you saw something on Instagram, TikTok, whatever, and people start talking about a certain thing, it's probably too late, right? And they hyped it up. By the time you get that information, you get the thought, the idea, it's really too late, right? Most of the time. So that's the risk you need to understand by understanding the phases of price movement in the market. Okay. All right. All right. A couple of general rules when you're trading. So you want to study the market and analyze the dynamics of the currency pair. Make sure you understand what you're doing. Sometimes, for gold, for example, you need to understand what moves gold. What kind of situation does gold require, right? What are you looking out for? Is it the rate cut? Is it because of the hype? Is it because of the geopolitical tension? You need to understand what's driving a certain assets, right? And Japanese yen cross is very specific, requires a knowledge of understanding how the Japanese government works. The US market, obviously, you can't just look at the US market, you still need to look at all the other major markets as well, just to figure out where the US dollar is actually going to go. You take a look at the Aussie USD, it's typically a range bound market condition, it doesn't trend a lot, the pound USD trends a lot more, the Euro USD is a little bit more of a range bound market condition and stuff like that. Now, those are the stuff that you need to understand in terms of figuring out the assets that you're invested in. Make sure you understand the dynamics of that specific instruments, okay? Okay. And now obviously you also need to assess the reaction of currency pair to the latest news as well. You also need to prepare for trading by marking relevant levels on the chart. This is something that we do 5 minutes before news gets released during the CPI as well as the NFP trade. And then you need to decide on your trading tactics, like when you want to open, when you want to close the order, how long you're going to be in that trade for. Is it going to be a short one? Is it going to be a long one? Okay. Make sure you choose the appropriate trading time frame as well. Are you going to be trading this on a 5-minute time frame, 15 minutes time frame, an hour time frame, a daily time frame? You got to figure it out because every time frame has a different trend. And you also need to determine the maximum risk for each order and consider using stop losses and trading stops as well. You also need to decide in terms of the deal whether it is actually going to be a quick trade or is it going to be a long-term trade. Is it going to be more than an hour? Is it going to be more than a day? Typically during news releases, I try to get out within the first half an hour. If I can get out within the first 1 minute, fantastic, right? First 5 minutes, even better. I typically don't want to stay too long in a trade during news releases because do keep in mind, our focus here is to trade the reaction in the market, right? After a certain period of time, once everyone understand that information, that once everyone figure out, what's the news, is it good, is it bad, typically within 5 to 10 minutes, we kind of lose out a lot of the volatility, market just kind of went back to normal. I typically want to get out from that market condition. I don't want to be in a market where I rely on the volatility and then the volatility die down and I'm stuck in the position there, which is not something that I'm looking forward to, okay? All right. Oh, excuse me, guys. All right, so here's a couple of examples of the penny orders, right? We have 4 different types of penny orders, which is the buy stop, the sell stop. a sell limit and a buy limit. So the buy stop and the sell stops, let's talk about the buy stop first, okay? Buy stops are order placed above the current market price. When price is rising up and continues to go up, where you place your buy stop, it will trigger your buy position. So on the opposite for that is the sell stop, order placed below the current market price. And if you expect price to continue to go down and break support, then yeah, you want to be using the sell stop to kind of, just mark out what we're looking out for in market. Just give me 1 second, guys. Just 1 second. Okay. Alright, sorry. But yeah, that's a buy stop and a sell stop. The buy stop and sell stop are basically just the straddle strategy that we use, right? We cap the market by having a buy stop above the market range, and then the sell stop just below the support there. So we're looking for breakout scenarios, okay? So buy stop and sell stop, you only use them in a scenario where you anticipate a breakout to happen in the market. The sell limit and the buy limit, it's kind of the opposite. I know the language is a little bit weird. The best way for me to explain this is to take a screenshot of this and just hang it until you understand what it is, okay? Because when I first started trading, it does take me about a year, in all honesty, to just remember all these terms, without looking at a reference sheet or anything like that, okay? The more you use them, the easier for it to, for you to understand. But otherwise, for a lot of new traders, this is actually a very difficult concept to kind of memorize. It does take a while. Okay. All right. So where do we use the sell limit, or what is the sell limit? Okay. So sell limit and buy stop, they're very similar, right? For example, if I place a buy stop and 10 pips above the market price. If it is a buy stop, when the market goes up by 10 pips, it will open a buy position for me. The sell limit, if I place it 10 pips above the market, when the market touches that sell limit, it will actually open a sell position. All right. So the concept here is that a buy stop is more of a breakout scenario. A sell limit here, it's more like, hey, I'm looking at that resistance. I think that resistance could actually hold, and market could reverse, and I could get it at a higher price than where it is right now. Then I use the sell limit. Okay. The buy limit is the opposite. If I expect a support to be strong and market bounces off that, then it would actually be a buy limit that you're looking out for. Okay, so these are orders below the current market price, and you expect price to hit that level and then bounce back up. You want to use a buy limit. Okay, so let's talk about the sell stop strategy first. Definitely, we want to look for one thing. Okay, and this is the reason why we haven't been able to employ the sell stop and the buy stop strategy in the last 3 live trading sessions, right? Because the market condition, we just doesn't have the requirements here. And the requirement for a buy stop or a sell stop position is that you look at the corridor of volatility. So if we don't have the corridor of volatility, then we don't have that consolidation phase. That means the market is not in an accumulation phase. Then we can't use the buy stop and sell stop strategy. For a buy stop and sell stop strategy to work, it will require the market to be in a tight range before the news is released. Okay, if the market started moving, before the news is released, then you can't really use the buy stop and sell stop strategy. So just keep that in mind. We require that range accumulation phase. We require that corridor of volatility. You can see the market here being flat. If the market is not flat at all, then we can just not trade with the buy stop and sell stop strategy. We might look at the limit strategy, but no, we can't use the buy stop and sell stop strategy. Okay, so let's take a look at the situation here when the news is released and it triggers one of the stop orders. For example, this one here, it hits the buy stop. You can see how quick it is. It's impossible, kind of impossible for you to actually react during these releases, right? When it hits that level, you might need to click on it. It doesn't work that way because everything happens in, a split of a second, probably less than a second, right? It happens in milliseconds. So this one here, sorry guys, I'm a little bit out of breath. I'm just having a little bit of a block nose here, but yeah, bear with me for a bit here, okay? But yeah, if you have a buy stop, all right, and you're, for example, away from the computer, or maybe you set up a full buy stop in 4 different currencies, you don't actually have to manually click on them. Once it hits that range of breakup, it will either hit the buy position or the sell position. Once one of the position is triggered, you need to close the other one. Okay, so for example here, price was just in a range here, and we anticipate a buy stop above that and a sell stop below this. All right, and once the news gets released, it hits the buy stop, you need to cancel your sell stop because you only want to be in one trade, otherwise it'll just flip back and forth. Okay, once it's running in your favor, you can move your stop loss to break even. That way you'll actually minimize your risk, right? So basically once it hits a stop, but the buy stop, for example in this case, and then runs to the upside, you can move your stop loss to break even to minimize your risk or get rid of your risk. But you still need a stop loss, right? Because if you take a look at where it was before, your stop loss is typically the sell stop. That's basically where the stop loss is likely going to be. Okay? So make sure you move your stop to break even when given a chance. Okay? Alright. So I do want to practice a little bit. I want to show you what's going on here. So, for example, we just got a news release here. Can we actually have that, buy stop and sell stop just now? The answer to that is actually no, because if we take a look at the news release here, right? We just got the breakout that happened here. The market wasn't moving in a in an accumulation phase, or it doesn't have the corridor of volatility, because the market was basically moving a little bit more in terms of a trend, right? It was basically in a range up there. So instead of being in a sideways market condition, it actually starts tracking higher, right? For a range, a buy stop and sell stop to work, the market has to go in a flat range for market condition. If it starts pushing in one direction, then you are not able to trade using the buy stop and the sell stop. Okay, so just be mindful of that. And same thing with the pound USD as well. Can we actually look at that and say, hey, it's in a range for market condition, it's in an accumulation phase? Technically it's not, and also we are not able to do that because market doesn't move flat like this. If the market was flat in a range for market condition, then yeah, by all means. But this one here, market was already moving like that. It was actually moving up, so we're not able to create a buy stop and sell stop because market creates a higher high and a higher low, so we're not able to trap the market. If the market is moving in a flat range for market condition, then yeah, we can have the buy stop up there, for example, right? So when price comes here, breaks higher, that would actually open a buy position for you. Okay, so just be mindful of that. We're not able to create a straddle strategy just because we don't have the corridor of volatility. All right, so let's take a look at anything else that we can take a look at. Dollar yen, would that fall into a buy stop sell stop strategy? From the time frame that we have here on the hourly time frame, we are not able to do that. Why? Because market was actually trending to the downside there. Okay, even the Aussie USD, we're not able to do that. The New Zealand USD, probably you can, because New Zealand USD at least it's kind of ranging a little bit, right? If we take a look at this one here, we might actually have a little bit of a corridor of volatility from that range to that range there, right? Assuming there's going to be a news breakout, for example, then yeah, we could look at that and say, hey, we can probably have a buy stop just above that level there, and a sell stop just below that support there. We could look at that and say, yeah, we do have that corridor of volatility. This could actually work on the New Zealand USD. All right, so that's something to keep an eye out for. Okay, but do you guys have any questions regarding the buy side and sell side strategy? Because otherwise, I do want to move on to the limit strategies, because I think there's a lot to take a look at, especially from a limit strategy perspective. No? Okay. All right, let's move on. This is the buy limit and sell limit strategy. So, for example, if we are looking at the market here and saying, hey, there's a little bit of another block up there. All right, we're down here, and I probably look at this and say, I do want to sell this, but I don't want to go in right now because I think market could come back and test that resistance, and then it might fall, right? So that's basically the case here. And you can see the difference here. It's pretty obvious, right? Typically with a limit strategy, because you're opening your positions closer to a strong support or a strong resistance area, you would actually have a lower stop loss. All right. So I think that's the advantage there that we have here by using the limit and the sell limit and the buy limit strategy. Obviously, we need to be careful of one thing as well, because if you have a sell limit up there, what if the market goes up there and then it continues to run to the upside and it breaks to the upside, right? So that's the risk you need to be associated with when it comes to the limit strategy, because basically, in essence, the limit strategy requires you to have a very good understanding from a technical perspective, a very good understanding from a fundamental reason why you want to sell at that high. Otherwise, it becomes risky, and it doesn't quite make sense unless you have huge confidence in using a strategy like this, right? So I would say this is a very powerful and effective strategy if you use the buy limit and sell limit strategy. However, it requires you to have the technical and fundamental know-how. At the very least, you need that. Otherwise, your probability is just basically going to be 50-50. All right? But if we understand the technicals, and I can share with you what's going on here, we can take a look at the Euro USD just now. Okay? A lot of traders were waiting for this, especially on the Euro USD. They're waiting for one particular price level. That would be the 1.10. Okay? Why 1.10 on the Euro USD? Because this would be a psychological price level, right? They would actually position themselves about here in terms of having a sell limit, right? If we take a look at this. Now, the whole general trend for this one here is still to the downside, okay? But if the market corrected itself back to 1.10, two traders are going to be looking at this and say, hey, if I were to look at it from a Fibonacci, for example, the 1.10 is going to be about 50% in terms of retracement. 1.10 is also a psychological price level. I could have a sell limit up there. So when market touches 1.10, it will take that sell position, and we are anticipating market is going to go down and continue to break lower towards 1.0950. That means, right, if I were to have that sell limit, I will show you the stop loss, for example. I can have 1.1025, and my target would be 1.0950, and then we'll make adjustments. You can see the risk reward ratio there. It's more than 1 to 2, right? This is how much you're risking, and this is what you're anticipating down there. So it's huge, right, in terms of risk reward ratio. It's not going to be a 1-to-1 risk reward ratio because you're opening a position closer to the stop loss. In fact, you could actually drag it lower and take a look at that. The risk to reward ratio just quadrupled, you know, just by looking at the limit strategy here. Okay. So a very similar situation with draw Japanese yen as well. For example, we're looking at this moving, right? If I were to use a Fibonacci retracement, I could be anticipating a move maybe max towards about 61.8%. If I were to anticipate price to kind of go down, right? Why are we looking at that area? Price could actually be testing this support there. That would be a good level. If we say, okay, let's do a buy limit there. What are we targeting? We could target, let's say, 149, for example, right? And then where's my stop loss? My stop loss is probably going to be about 146, 80, for example, 146. Okay. Look at that, the risk reward ratio, it's just way different, right? So that's the limit strategy. If you understand what's likely going to happen in the market, then limit strategy, it's actually a very powerful strategy to use, okay? But only if you understand it. Otherwise, it's not as simple as a straddle strategy where we just have the buy stop and sell stop. But that one there, I think beginner traders can do that, no problem at all, right? Buy stop, sell stop is easy because it depends on the breakout scenario. It only happens in one direction, most of the time. Worst case scenario, it whips us, but if we go with the normal volatility that we anticipate in the market, typically it just breaks in one direction and run off, right? And so as long as you manage to get in during the news release and get out quickly as well, it's an easy strategy. It doesn't require a lot of thinking. But the buy limit and sell limit strategy, it does require a little bit of a technical know-how. At the very least, you should understand what the key levels are. If you understand support and resistance, that's the bare minimum to use the buy limit and sell limit strategy. If you don't understand the trend line, if you don't understand what is the support, what is the resistance, if you don't understand what the key levels are, then don't use the buy limit and sell limit strategy until at the very least, you understand some of the technicals there, which you can find a lot of videos on the channel here in terms of technical analysis. In fact, I've done a series on beginner webinars to intermediate level. If you want to look it up, there's a playlist for that as well. Okay, so make sure you check it out on the channel if you're new here and somehow you're not watching this live, you're watching a recorded session and you're trying to figure out what's going on in the market. Okay. All right. So you can also trade after the news is released. Probably okay to do that because you have the information after the news is released. And this is typically where we use the buy limit and sell limit strategy after the news is released, right? Because we're processing new information. During news releases, the buy stop and sell stop strategy probably works better. But after the news is released, then limit strategies are going to be better, okay? All right, let's do a quick test right now. If you guys are still watching, paying attention here, all news can be divided into two categories. What are they? If anyone can answer that for me, two categories of news. What are they? And let's combine the second and third question here. What are the type of orders that you understand here, and which one is actually the most often used in news trading? Okay, I'll give you a couple of minutes here just to give me an answer to this one here. If you guys can answer that through the chat, that will be fantastic. Thanks for answering, Ulvin. Yeah, expected and unexpected news, and we are basically in the midst of that. So I think you guys need to be aware as well on what's really going on. We do have, developing situation in the Middle East. We don't know how it's going to lead up to, and because of that uncertainty, we need to understand where the safe haven flows as well. Those are going to be our unexpected news. And the expected news, for example, this week, it's going to be the CPI trade on Thursday. It was the labor trade last Friday, right? So we have that two categories. All right. So yeah, we got stop orders for breakout strategy, limit for rejection strategy. Yes. Those are the four different pending orders that we have: the buy stop, sell limit, and the buy limit. All right. So we use the buy stop and the sell stop a lot more during news releases because we are typically anticipating the market to be in a pressure cooker, just waiting to kind of just explode, right? And that's basically the essence of news trading, right? So that's the reason why we look at the buy stop and the sell stop strategy. Okay. Okay. So just before we wrap up for today, this is the code again. It's NOFAM 2024. So if you're looking for a code to W deposit, you can use the code NOFAM 2024. If you don't want to use it now, just jot it down. You can use it until the 31st of December 2024. Okay. All right, any questions so far for tonight's session or anything that's related to news trading? Please type in through the YouTube chat. And I do have to apologize. It has been 3 weeks. I'm still recovering from a sudden illness here, and sometimes it's really hard for me to catch on my breath. So I do apologize for that. I think today was pretty bad in terms of me stuttering a lot more. So yeah. But yeah, any questions regarding news trading, feel free to let me know, and I'll be more than happy to answer for you. And the unexpected will be another missile launching. Yeah, I think for that one there, it's kind of expected. I think the unexpected would be what is the retaliation that's going to happen. Who else is going to be involved. You know, I think the Australian government has already issued an evacuation order from Lebanon. This was issued yesterday and today. So yeah, I think that, there's probably something going on there. Evacuation order by a government for the citizens in a certain country. I think that's actually a huge thing. Kind of give a little bit of a hint into how things are going to become. But yeah, you need to be aware of the stuff here. Otherwise it's going to be really tough because it can strike any moment. But if we are prepared, then it would actually become part of our risk analysis. Right? If we open a position right now, things are heating up. What could happen? We should have a lot more emphasis on using a stop loss rather than not having a stop loss. But yeah, everything clear? Yeah. Thank you. Really appreciate it. But yeah, hopefully it'll be better within a day or two. I'm feeling a lot better compared to what it was 2 weeks ago. I caught a really bad flu for you guys that probably didn't know. I haven't been following. I got a really bad flu. Definitely not COVID. Actually, I had it tested, but I don't know what's going on. It's actually worse than COVID. And I think it was actually one of the worst flus that I have had in the past 10 years. But yeah, it is what it is. Things happen. So you guys take care out there. Just stay safe, be healthy. Don't just worry about trading and not paying attention to your health. No point having all the money in the world, but not the health that you're looking out for. Okay? All right, what's next? We got news trading number 3. That's going to be our inflation CPI numbers. That's going to be on Thursday. Sorry, today's Tuesday. So obviously we can talk. We actually do want to cover a little bit of the theory there about the CPI, but I do want to focus a lot more in terms of the potential scenarios there. And also, it will be actually very interesting to take a look at the CPI numbers on Thursday because, in all honesty, I'll just share it with you right now. It could actually be a huge market moving event. right? Because we don't know how it's actually going to impact the FOMC's decision. Will it have an impact or would it not have an impact? We don't know yet. And also in terms of whether or not the inflation is actually going to be near consensus or is it going to be a huge miss. There's actually four potential scenarios that we need to talk about. That's going to be on Thursday. So make sure you attend the session on Thursday. It will be a market moving event. I think there's going to be a high volatility in the market as well. Could be a good thing. It could just be in the same direction as where the market is actually going this week, but it could potentially reverse everything up as well. If we kind of miss the consensus by a huge margin. But that's going to be on Thursday, same time as our NFP trade last week, as well as the session today. So with that, good luck with the trades, and I'll see you on Thursday. Have a good one, guys.